Hey, what's up guys? Node Investor here. Time for another update on this crypto trading. Trading in a bear market, trading in a brutally, somewhat not volatile, but choppy markets. And so as we wrap up January, to cut it short, January was a red month. At the end of the day, I was down about 7.5%. Ouch! No fun. Sometimes you're hot, sometimes you're not. And this month was not. So don't do what I did this month. I had some good trades, some bad trades. I'm going to go over just a handful here of the last couple of weeks, but for the most part, it's been very quiet. In this account, I think I may have even a little over traded it. Well, I know I did, and I'm going to go over that right now. In my other accounts, been mostly just sitting tight, mostly flat, a little bit of short side here and there, but haven't done a whole lot in terms of big trades here in the last couple of weeks. I've been very busy in the stock side of things, just with earnings season. Trading has actually been very good from that perspective. And I've even taken a few Forex trades here over the last few weeks, and it's nice that that's also working out. So it's always good to have different markets that you can trade, especially if you're an active trader, if you like to do it more than just occasionally or swing trading. But I certainly stay active in this and watch a handful of markets. But to say the least, crypto was a little bit slow. And if we look at the overall trend here, clearly still in a downtrend, bearish trend. If you look at basically since January, we started off the month with a somewhat tight action, and then we had, of course, the big push higher. A lot of alts were running during this time. Then BTC, of course, went flat for a few days. And then we saw the big smackdown. I was in a few alt trades during this. Those got stopped out, of course. And then after that, it's just been nothing but chop and sideways, somewhat drifting lower. And so it certainly has been no momentum. There's always something working, absolutely. There's been a few ones that I've had to just pass on and not trade for the sake of putting the odds in my favor, managing risk and all that. So all in all, I did a pretty good job managing risk. I didn't get too crazy, but I did on one occasion, and it cost me dearly, and I'm going to go over that here with you guys. But some of the trades that did work out were pretty decent. We saw the trade log here a few weeks ago. Not a lot of gain since then. It was just kind of been sideways and chop. So we'll go over a few of those alts. A couple of things that I do want to point out before we do. I'll go over that here. I have posted this trading journal template. Some of you guys have asked me for this, and so there is a link in the description where you can download this. I will also be adding this to the website, and I've added some instructions to there. Feel free to send me a message on Twitter or post comments here if you have questions. It's just a basic Excel spreadsheet, so hopefully it's somewhat self-explanatory, but I did put a little bit of instructions here. The basic tabs, of course, are this trading log, which you really just fill out this section here. Everything else is auto-calculated. Of course, you put a starting balance. You can make this dollars or BTC. All of my examples are BTC, but I also included the position size calculator for those of you that are interested in that. And I also have a dollar equivalent for that, for those that want that. I've also added a template sheet here with some instructions as to what I use. Of course, you don't have to use this. I'm just sharing these with you guys for those of you that are interested, just to get a feel for how I document some of this. And I've also included a few of the recent examples here, just so you guys can get an idea for what type of information I put in here. There's one small caveat here. Some of these BMI values that I populate, you don't have to use those. These are just things that I use, or some of my proprietary indicators. Those are available on the Node alerts for those of you that are part of the Insiders subscription, but you can get that. You also get the BMI value for every individual name here. We've recently added that to the cards, and so if you take a trade based on an alert, you can get what the BMI value is at the time, as well as the BTC and the ETH ones there. So, but again, like I said, you don't have to use those. It's just something I use because I use this as a filter. So when there's certain parameters below certain values, I will pass on trades because risk is generally higher. So if you have any questions, just feel free to send a message. But again, most of this should be pretty self-explanatory based on the examples there. So feel free to modify this, change it. I'm sure you can improve it. make it your own. Whatever works for you, use it. So let's get to it. So a couple of trades that I wanted to share with you guys here. So of course we saw BTC. What happened here? The big loss that I took this month came from trading or attempting to trade USD Tether and True USD, which at the beginning I said I wouldn't do. So right away I broke my rule there, and that was a mistake, because what I ended up doing here was I was in a few trades, got stopped out, and it looked like Bitcoin was really going to go lower. Saw some bear flags. So instead of trading these in my other accounts, I said, hey, why not take some trades here? Some of it was just over trading. Well, not some of it. All of this was very much over trading. Some of it was revenge trading. Some of it was just unplanned. And I did this it wasn't just a single trade. It was a couple of days of this over a weekend. It was really this Friday evening through kind of Sunday morning. Some up, some down, some up, some down, but it was literally death by 1,000 cuts. Before I finally realized on Sunday evening, what the heck am I doing? I was exhausted. I generally use the weekends to kind of recoup, prep for the next week, because I also, kick off Monday morning with the stock market open, and it was just purely the definition of insanity, over trading, revenge trading. It was just very impulsive. And so lesson learned here, guys. I mean, I've been doing this for a while, and even then I can fall into the trap of, oh, let me make up this small loss that I just took by revenge trading or over trading, and expecting the market to do what you want it to do, shying away from some of the risk management principles. And essentially what I ended up doing was taking not just one, but I did the math. I took 20, yes, 20, ridiculously 20 trades over this period. Now they were, quick trades, and of course it was basically scalping and trying to do that, but that's just not the style that I wanted to do for this account. And again, it cost me, all in all, the activity over trading, the insanity, the choppiness here, net was a loss of 0.25 BTC over these couple of days. And so that hurt. And not only did it hurt from the account side of things, but it takes a psychological toll on you. And psychological capital in trading is very important, because what happens is if you're not fresh, if you're coming off of the back of some big losses, you should generally take a break, because then it kind of clouds your judgment. One, you're kicking yourself for the craziness that you just did, the mistakes that you just made, and two, you're kind of exhausted, and then you're not clear to take good signals and good strategies on the next couple of trades. And so that's why it's always good to just wait for those good setups, wait for the trades you're comfortable with, as opposed to getting into like a subpar trade, or a trade that's not an A+ setup for you, or a trade that you're not comfortable with, or it's not your normal style. Because then what happens is, even if it's a small trade or a small position, you're tying up a lot of psychology managing that trade, keeping an eye on it, looking at the charts, and all the stuff that comes with trading. And so if you're going to do that, save that for some of the better trades, the better setups, the better risk-reward trades, and that sort of thing. So anyway, needless to say, this cost me, this choppiness really added up before I finally put the brakes on things, went flat, and just said, what the heck? And I spent the next couple of days, painstakingly going through every single trade. I'll show you guys real quickly. I have an online journal that I keep, and I even posted the insanity of over trading. I put a little chart together. I took this serious. I was very upset with myself about doing that. I was annoyed the fact that I had to spend an hour and a half going through the trades and what each one costs, but it's something that is worthwhile doing, because it was a big reminder of a lesson I have long since learned, but just was eye-opening, the fact that we can still fall into those traps. And so overtrading is probably the biggest killer of accounts, aside from improper position sizing and risk management. And so lesson learned, guys. If you fall into that trap, be careful with that. And if you catch yourself doing that, recognize it and put the brakes on that as quickly as possible. Step away, shut the thing down, and just try not to do what I did during that couple of days. And again, this was only 2 days, but it was very costly. So there were some other trades that worked out. One of them was this Stratus trade. This was a couple of days later, took a few days off, came back, regrouped, said, okay, let's get back to this. And of course, the market was still going choppy and sideways during this time. So I was still very careful with position sizing. And essentially what I was looking at was this falling wedge. If we go to the trading log for this example here, let me find that. That's the template. There we go. So looking at the Stratus trade here, this was again on 115. It wasn't a huge R multiple, 2.0, just kind of my minimum there. These were the entry stop loss percentages. At the time, the BMI index for this one was strong. BTC was okay with 75. ETH was strong. Again, a small position size. And here's what I was looking at. I was seeing this fallen wedge. We had a very good volume breakout. I didn't chase that. I was being patient, so I waited. And then I started seeing this consolidation here at these moving averages. And that was really my signal. And so I entered here with a stop basically right below the swing low, which also happened to correspond with this trend line that had just been broken. And so my target on the trade was essentially, let me go back to the charts here, was essentially a Fibonacci retracement. So if we took a fib level from here down to the lows, I was looking at a couple of levels as potential targets here. Of course, the 382 was the first one, 50%, and then 618. But because of the overall market weakness, I was not banking on the 618 being hit. And so what I ended up doing is I took most of it here at 382 and started scaling out at that point. And it turned out to be pretty good. I got a little bit early, but it turned out to be a pretty good exit, selling into strength. And then look at, of course, what happened next, fully retraced. And it was just kind of a very quick move. And that was the trade. I mean, it was just a quick trade. Essentially, I saw this breakout, little consolidation here, jumped in when it looked like the pullback was done. And it sold into that momentum here going on the upside. When it started to pull back, I was looking at this as a potential re-entry point. And this is what I was looking at. I was actually had a dip order that I wanted to enter here. And so I actually put some bids here at this low. And I was thinking, hey, this is a pullback. And then we'll get to that next rally to the 618 level. But then the market just was not looking good. And so what I did was I got filled here. I got an alert that I was filled. But I quickly closed out. Actually was in the green a little bit, but I just closed it out right away because I was not comfortable with the way the market was looking. Some of the other names started rolling over. And so I decided to just get out of that trade. I wasn't feeling good about it. And it turned out to be a good decision because then, of course, it did drop. We saw this big spike. But overall, there was just no more momentum from that point on. And so that was a good call from that perspective. And we never did hit that 618, of course. So just goes to show you that the overall market really put a cap on a lot of these moves. Now the next one here was actually a stop out, but I want to show you guys how this one played out and the lesson learned here. And so this was Tron, and I had traded Tron here along the way up during this first rally. And then we saw Tron kind of pull back. And then Tron had this big volume breakout here, which was basically this rally. And so it came back on the radar. Didn't take that, of course. I was just waiting, watching this one out. And then I started to see this little ascending triangle type of base form on Tron. So this is what I was watching. I was looking at this. And so I was looking for a potential continuation of this breakout. I was looking for a move through this resistance. And I wasn't looking for a retest of this prior high. In fact, I was thinking we might see another rally out of this base and then make a short, smaller high and then just kind of double top and then roll over. And so if I did a measured move out of this base, what I was looking at was not a huge target. Let me move that higher, extrapolate this out. And so this is essentially what I was looking for. I was thinking, okay, this would rally up somewhere in between here, and I'll start trailing the stops if it continues higher. And so I ended up taking the trade on this pullback here. This little breakout we had was my signal. A lot of volume came in, it started to pull back, and I ended up taking the trade there. Now luckily, I entered well. I entered on a dip. I ended up getting filled at around 690, I think this was my dip, which looked good at the time. I thought, okay, great. And my stop loss was a 1%, 1.5% stop loss, which was just below here. So made for a very nice tight stop on this trade. And really I was just thinking if it gets below this lower trend line, below this big green candle that was kind of the signal for me, then that's going to invalidate this breakout and I'll just get out of the way. And then it pulled back, almost hit the stop, came right back here. Let me see, that might be hard to see. Let me zoom in a little bit. Here we go. Held the line, held the 22 EMA, pushed back up, kind of sat tight, and then it looked like it was about to get going. I thought, all right, here we go. And then just boom, rolled over. Of course, I got stopped out when this thing rolled over, and then just went flat. And then, of course, we know what happened. Or if you guys have been following Tron, this thing took off finally. But it was a big shakeout before it took off. And so that happens. that's just part of the game. I could have certainly decided to jump back in here or find a re-entry point when this volume came back in. I've done that before. I said no big deal. You know, you get shaken out. It happens. Find a place to get back in. Look for a new trade. But I didn't because of the overall market again. Everything was looking weak. I thought until BTC shows some more momentum, I'm not going to take it because I was seeing a lot of other trades that were good setups, and I thought, okay, this one's going to do this or that, but I never took the trade. I just was watching them, and most of them fizzled out, and it was kind of one of those, all right, I'm glad I didn't take that trade type of thing. And so I let this one go, and of course, this one had a nice little rally and did ultimately retest that prior high that we were looking at before pulling back here as we've seen over the last couple of days. So got stopped out, part of the process. It is what it is, but that's just the nature of trading here. And it's important that you keep your stops reasonable, that you keep your position sizes reasonable, because this could have just as easily stopped out and then continued lower. I mean, there's just no way to tell. I could have given it a much wider stop, but then that would have meant a much smaller position size. And so that's the trade-off that you have to make. And so those were the few that I wanted to go over with you guys. There was a couple other smaller quick trades that worked and a couple of small ones that got stopped out. All in all, didn't take any massive losses other than, of course, what I mentioned here at the beginning, this death by 1,000 cuts, which culminated in a net large loss here over the couple of days. But everything else was well within my risk management rules, well within the tolerance levels that I follow there. And so did good from that perspective. Of course, the market didn't really give us a lot of back-to-back days of follow-through and momentum. Let me see that Tron trade that I was looking at, if I can find that sheet. Here we go. And so this is the Tron trade that I was looking at. And you can see here, this was a big position size, much bigger than I generally take, but it was because it was a very tight stop and I entered well. I bought on the dip there, and it got stopped out. It is what it is. So we'll have to see how next month goes. I've reset the account, and so we'll see if hopefully we get some more momentum, some more green days. Zooming out here and just kind of looking at the month here. For the month, Bitcoin, where's the first here? We go to the first. You know, we'll take January or December 31st as the starting point. You know, for the month, BTC is down about 7.5%. And of course, we had very few up trending days. We had this big down day, and of course, it's been just basically down since that point. It looked like we were about to break out, would have made for some nice momentum had we cleared that 4,100 level. Didn't happen. So we'll see how February goes. Right now, I'm just remaining cautious because the momentum is still heading lower. Yesterday, we saw a nice little attempt off the lows, but most of these names have just rallied right into the short-term EMAs on the daily chart. The moving averages are still heading lower, both the weekly chart and the daily chart. And so until we start to see some of that turn on ETH, on BTC, on some of the majors, got to remain cautious here because it's looking bearish out there. There's just not a lot of upward momentum on a lot of these names yet. So we'll get there. I'm just going to be patient. As we know, crypto has these kind of out of nowhere moves that just show up. And so got to be patient, got to be ready and attentive because they can show up, but I'm also not going to chase them and FOMO into them. I'll wait for them to play out, and then I'll look for some good risk reward entries. And hopefully February has some more trades that I can share with you guys, and ideally some good setups that we get to catch. So I hope you had a better month than I did and than the market did. I know some of you guys on the Slack group have done okay trading some of the smaller cap names and doing good on that stuff. And so I hope everyone did better. And if not, don't let it be a wasted month or a wasted week. Go back, take the time. Yes, it's painstaking, but it's very important that you go back and review your trades. Review your setups, what you were looking at, what was your biggest winner, what was your biggest loser, why did you make mistakes, if you made any, what could you have done better. Even if you had winners, did you let them run? Maybe you cut them too short. So ask yourself those hard questions. Go through the trades. Are you over trading? Maybe you're taking too many trades. You know, just all the fundamentals of trading. Your risk management, was it good? Did you take too big of a position size? Did you scale into positions? You know, just kind of examine all of those questions, all of those things, because ultimately trading is a long-term game and it's about continuous improvement. And if you don't measure and if you don't review and look for areas to change and improve, you're never going to get better. And you're never going to understand why it just didn't work out for you. And so I believe that trading is something that most people, if not everybody, can learn to do if you put in the time and the effort and the persistence to do it. It's very psychological. It's very difficult. If trading were easy, everyone would be doing it. And it just takes some time. Just like any other skill to develop, it takes time and it takes reps. You just got to do it and do it and do it and do it and learn while you're doing it. So appreciate you guys watching. Look forward to the next one. Until next time, take care, everyone.